Hey everybody, welcome back. Well, what a wild day to say the least. Now, ES is actually up again, a higher high, and we see this pattern a lot where you break down and then you start rallying. There is macro data to support and substantiate what happened today, and we're going to go through that macro data in some detail. We obviously have to go through Tesla's earnings, Nvidia's pretty much setting up here after Texas Instruments. I'm looking at another screen that I just going through my notes. I definitely want to go through that as well, just looking at Nvidia. And the movement we're having after hours. Take a look at SOXL2. We're going to get to that. But if we take a look at NASDAQ and how this is setting up right here, see how you're flipping? You are flipping, but you have a 12 and a 22 and a 55. So we cannot expect this to act the same way as it's been acting. We did get some really big news today, especially after hours with Texas Instruments, and that's really driving the video, which I'm watching out of the corner of my eye on another screen, and I'm also waiting for the conference call on Tesla to start at the time of recording this. So please understand when this is being recorded. I have all the data in front of me. I just don't have that portion of it yet. Now, we can see we ran right into that 55. I use a 12, a 22, and a 55. And you're watching these start to slide. We did see these movements in the ES, and we did feel that we were getting to that point in the bottom. I gave two reasons on Saturday why I felt that could happen. Let's review those really quickly. Now, the first thing that I noticed here was the flip. And this is what we always look for. So I use the MACD histogram. I don't change the settings. Some of my things I do change settings on, but I use the histogram. And the histogram gives me a nice sense of, hey, are we bottoming? Do we have the possibility of bottoming? And it's not 100%. Let's be really clear on that. So you can see here how it worked. And we held, meaning we're done going down. And then it triggers. Then it tries again, and then it triggers again. So you have to look at that as negating the pattern, meaning if you get another one that triggered, it would negate the pattern. But what you do have is you do have this down a lot more, meaning MACD is down a lot more on the histogram. And usually when you're getting down here, if we just note these levels, as we pointed out, and this is why I always say to people when they start watching our videos, first welcome, but all these videos are linked together. So if you're trying to figure out what's going on in the market, you might want to subscribe to the channel. We cover it daily and what's going on out there. Anyway, we'll get to that. But you see what's going on here? So I think it's really important to look at this and understand what exactly is happening. And that's a level that you don't see too often. And so when you see these reversals, again, it doesn't mean it's going to last, but it certainly means you're going to go sideways for a period of time at a minimum. And that's what we've been seeing here. Now, we saw that on the ES. If we take a look at the SPY, of course, you're going to see it at the same exact time. That does not mean that we are out of the woods, that everything's going to be rosy. Although this data that came out tonight on Texas Instruments is really very promising, considering what we went through with ASML and Taiwan Semi. And I do want to spend some time on that and the econ data and show you why the econ data and why the stool reigns supreme. But if you take a look here, look at the Qs. It's the same soup. See where it flipped yesterday? And then since then, what's happened? We've just gone sideways. So this is the first thing that I would use. This is always going to trigger before you start seeing people flip the moving averages and things. A lot of people will look at the moving averages, and I, of course, agree. You should be looking at them. But by the time that they figure it out here, it's already over. You already know that you're probably going to start flipping those averages. And to even use those averages as a moving, this is the 3, the 5, and the 8, they're still out of whack. You're still here on the 8. You're still out of whack here on the 5 and the 3. I'm not saying I won't use this as confirmation if it starts turning up like it did back here, right? And then it starts getting into a better pattern. I'm not saying that I wouldn't use that or watch that. Of course I would. But to use this or wait for a moving average, which is a lagging indicator, the way that you use MACD and use the histogram for the bottom, I use it as a leading indicator. And if you learn how it's calculated, it's fairly accurate for that purpose, not for the purpose of determining the magnitude or is this a good spot to get. But let's say you're thinking about getting out of trades and you see something like that. You might go, oh, maybe I should wait a little bit, or I really wanted to add to, let's say that you were a super long-term investor in Nvidia. Like you wouldn't do it if you're just trying to day trade. But if you were a super long-term investor in Nvidia and then it went sideways, you might look at that. You might take a spot where you want a dollar cost average in. If you're doing it through multiple years, it might be a spot for you. That's how I use it. I don't use it to actually just execute. I use it as a data point. Let's look at the second thing we went over. Now, the second that we went over was the McClellan oscillator, and I'm going to clean that off. And what you're looking there is something very similar, but the McClellan's calculated differently. We're not going to get into how this is calculated again. We spent a lot of time. You can watch Saturday's video or you can look it up, but I don't want to spend the time on that because we have so much to go over here. And we can just see where we are on Wednesday, and then Thursday and Friday, you can start seeing how it's getting better. And now we can see how it's getting better here. For those that aren't aware, you can see there that is the advanced decline line, and that's what you would use there, just the advanced decline. And I'm just showing it straight up how it is. Personally, this one is actually the one that I have up here is actually from the New York Stock Exchange, so I should probably just use New York Composite, really, and show it that way because that's what it is. So you can see here that we're flipping green. How long are we going to stay green? I don't have a clue. I mean, are we going to stay green? Are we going to flip back over? Nobody knows. The important thing is that this is pretty much showing you that, hey, we're kind of washed out here. Does that mean we're just going to go back up? No, that is not the purpose of me showing you this. The purpose of me showing you this is that, hey, based upon what you're seeing on the oscillators, the MACD, and what you're seeing with the McClellan, we're hitting a point here with these histograms that we're getting clear indications that we're in a position where we are starting to bottom. And we talked about this, right? We talked about this with the Qs the other day and the third standard deviation of hitting a Bollinger Band. And the probability of being down here is like 0.3% that you're not going to bounce. You always bounce in here. You just don't know how worse it's going to get. So you're always on edge, knowing you're at the tail end of the move, not at the beginning, right? And we went through this, and I don't want to spend a lot of time on that, but I do want to just reiterate. Then you're going to get your other indicators that are going to kick in. Like we're going to start getting the RSI, which I love, but that's going to start kicking in here. And you can see how we hit the 30 and rolled, 30, 30. Let me say it one more time. There it is again. And you can actually see that's especially beautiful. It's a positive divergence. So you can show that to people when they say that they don't exist or help. But what you're seeing here is your good old fashioned, hey, we're really overdone here. We're extra crispy. And so we're starting to trade up a little bit and work some of that off. Does that mean we're going to miraculously lift and everything is fine and we're going to go back to running? No. It just means that what we just went through, we need a breather. And now that we know that we're going to start seeing sector rotation. So what we like to look for now, and this is really important, please remember this. We went through tech yesterday and why tech may lag a little bit or underperform other sectors. So it's our job when the market bases is to look for the new leading sectors. Now, in front of us are 40 sectors. And what we like to do is we like to see how those sectors act over a period of time. And we want to see specifically on days when we have those kinds of reversals. So let me just get to this. All right. So what we're going to see from that data point on, from 9:30 on, we have the pot names, obviously, that were doing their own thing. But we have ITB, which is what? Home construction. We have post, block, and then we should also have XHB, which is what? That is your home builders. Now, why are they leading? And this is what's really important about this. You start going through these and going, okay, well, they're outperforming software. They're outperforming semis. They're outperforming pretty much everything across the board, except for one sector. And there's subsectors of that. So if someone was going to tell you is who's going to do better today, home builders or the crypto names, it's actually very clearly the home builders. Now let's talk about why. Now, before we can begin, we're going to have to just go through the stool for a second. And this is really important. So again, we have the macro, the fundamental, and the technical, right? And this is how we trade, or this is the market, and this is what affects the market. Sometimes we lean on the macro leg, sometimes we lean on the fundamental, and sometimes we lean on the technical. And it's really important for people to get this. And I'm going to explain why. The majority of traders that are out there don't look at macro or they don't look at fundamentals and they just look at technicals. So when the situation changes, they cannot adapt as fast as somebody that understands these. They'll wait for, quote, that spot to be triggered or the trade to be triggered and not understand that they're wrong. I have no problem being wrong. There's nothing wrong with being wrong. What's the problem with being wrong is staying wrong when you know that you're wrong. That's the problem. It's not your conviction. It's that when the data changes and you look at it, that's a problem. So here's macro, here's the fundamental, and here's the technical side. We are heavily on macro right now because of what's going on. Fundamentals as well are being driven by this. Remember that. So who, what, when is how we look at the world. Now let's get to what actually caused the shift and possibly the new leaders. Now lately, we're all really acutely aware, if you've been watching these videos or doing your own work, that the chances of a rate cut are pretty much slim and none and slim left town. So what we're starting to see is a reason that the rate cut, actually the percentage chances actually went to a place of this rate cut actually being better. And that's a good thing. So we start off the day at 7:30 with building permits, actual, previous, consensus. So previous is here, building permits actually uptick versus consensus, but are less than last month. And then you get building permits month over month, and you can see previous. The consensus was here, month over month final. What is this telling us? They're actually increasing. But it's still negative. So it's not great, right? So we don't really have high hopes for the builders, which I've been pretty negative on the builders lately, and I had a couple shorts on, as you'll see in a moment. And then if we go into the red book, I care, but I don't really care about the red book versus year over year. And you can click on it. This is off of Trading Economics. You can click on it, watch it yourself. What I care about is the PMI flash. And what I'm looking for is I don't want to be over 50 on any of this. Remember, 50 means expansion, right? 50 is the line. 50 means expansion. Anything under 50 means contraction. If you go and look at 945 today, which we will take a look at a little bit later in the day in this video, you'll see really clearly here how this played out. But once this hit, the market ripped. And I was surprised how slow it was, but then it kind of made sense. They wanted to wait. So this coming in is actually slowing down globally. Services, PMI is slowing down. Manufacturing, this is actually, I know it's tiny, but it is a contraction number. And that's exactly what we want. Then you get into new home sales. Boom, boom. New home sales are better. New home sales month over month, boom. People are out buying homes. The only reason I can think of why they're going out there is because rents are so much. So maybe that they've had enough. I don't know. And manufacturing came in line, which we are watching these now. And then you could start seeing the T-bill auctions at 11:30 and how that actually was in line for 42-day paper, which was kind of interesting from where you were previously. So that lets you know that they're not expecting rates over the next 42 days. They didn't think it was worth paying for higher. And then, of course, the 2-year note's going to be a little higher. But what does this mean to us? Well, this means that the probability of a rate cut actually increased, and increased quite nicely. And so when we see that, we can take advantage of it. Now, what that meant was that the home builders, with that home builder data, that put us in a great spot. You can see where we are after hours. I don't attribute this to, we're going to get to Tesla in a moment here. I don't really attribute it to Tesla. I attribute it more to some of the other names that came out this evening, such as Texas Instruments, frankly, which actually, considering what we were expecting from semis, that actually delivered what we wanted to see on the Texas Instruments side. So that's actually really nice. And you can see this, and we'll get to it. But you can see how Texas Instruments just keeps pushing, and it's lifting everything up at the time of recording this. So you just see how everything out there is lifting on that news. SOSXL as well. You can just see that everything's just pushing. All right, fast forward back to the SPY and let's get to it. So then if we go to that level of right in here at 945, 950, let's go to a 1. And you'll be able to say it. So right in here, that 951, you pop right here on the news. And then from there, what happens? The retest back over, right? And then you get the 10 o'clock news, and that was it. You never pulled back. At the same time, if you go here and take a look at XHB and watch how we did there, let's pull this back and take a look at this. So you could see very clearly how, all right, we just fell right out of bed like it's going to be same soup reheated. And again, at this point, I'm short a couple home builders. And then the 945 data comes out and I'm like, oh, I'm not that concerned. And then I read the 10 o'clock data and then it started doing this. And I'm like, okay, we're consolidating here. And this was really, really good data. So what does that mean to me? It means I have a decision to make. And so what I can do is I can say the data's wrong and stay short, or I can cover and look at positions and go long. And the data showed me clearly that the fundamentals are way stronger for these names than are out there. So I was able to actually get out immediately. And this is a really important distinction I want people to make. The energy of staying in a trade when you know you're wrong is exhausting. And it's an ego thing. You don't want to stay in. You want to just get out of the way and then reevaluate. For me, this was a situation where it made sense to actually go, okay, I'm wrong. These things are flipping technically. They're going to be long because people are going to buy them. And that became very, very clear later in the day. Take a look at this video. So new home sales are up month over month. Previous was negative 0.5%, and new home sales are through the roof. So people are buying homes. So this is going to be really interesting to see what happens with these home builders. The home builders could actually move positively on this news. It's not great for me being short home builders. There goes DHI. Yeah, I'm probably on the wrong side of this now. I bought some now. DHI is going to move on this too. Toll, all those names should really move on this. Get involved. But Toll, but DHI too. But now I covered my DHI short. These should move on this news. This is big news. That's a much bigger number than expected. There they go. All right, so Toll's up. I'm up in Toll. I'm up in now. I'm up in DHI already. So I'm up $1 in now. We're going to pull something out of now right there. DHI is flying for me already. GRBK, you're going to crush me. So I closed it. So it's always so important, especially shorting, to just pull something out early. All right, so I own the home builders. And that was one thing I did not expect to have happen today, considering I've been short them. Now I'm going to trim $1 on Toll. I'm going to trim $1 in DHI. I'm going to trim. So I'm pulling money out of them as they're trading up, just FYI. I don't plan on staying in all these home builders, but they can really get motoring here. So for me, what I'm doing is I'm just like, they're up $1 or $2 and I'm pulling out like 20% or 30%. I'll move the stops to break even on the rest and I'll just see how they play out. And if they go, they go. If not, I've still made money off the trade. These trades were just layups. I mean, there's nothing for me to do here. Like literally nothing to do. Pick a name. It's like throwing a dart. Up $2 in Toll now. Up $3. DHI. Yeah, these are all rocking and rolling now. Good. So into that last push, just FYI, I am trimming all the home builders. And now, once again, I'm just pulling more out. And all the stops are set at break even now. And I'm just leaving it all on. But as they push and they have like these moves, I'm just pulling money out. It's just prudent to do that. Now, how are we able to do that? Because we understand the stool. We understand the macro is important. We understand the fundamentals of companies, right? We understand what's going on. We understand who it's going to affect. And we understand when we should get involved. That together makes the stool. The other one's cooler, but this is what it is. So it's really important for people to get this. Too many people are doing this, and I see it all the time. Please share this video if you find it helpful, if you find value in these. I hope that you do. I purposely do not run ads. If I take a look at something like DHI, it became increasingly clear that I had a problem, right? This became increasingly clear that I had an issue with this name. And then based upon that, I'm like, okay, I have one or two things. I can either stay short, right? I shorted at like 146, so I actually did make some money on it, or I could just get out of the position and go the other way. And you saw all of them at the same time, as you just saw. Look at now. Look at DHI. Look at Toll Brothers, back over the 55. I mean, these names just absolutely exploded on that data. That data was a game changer for home builders. And your ability to process that information, learn that information and process it, and then understanding how that fits into the narrative technically is everything. That's edge. When people are talking about edge and they're pointing at a chart, overlay your technical analysis with the fundamentals on how macro is going to change the fundamentals, and it's a game changer to your trading. Hope that was helpful. Please comment below if it is, and I can start linking more of that stuff. Let's get to it. I have one word for everybody: robo-taxi. Now, we're no longer worried about the Cybertruck. We're now worried about the robo-taxi, and you can see at the time of recording this, I had to stop for a moment because I'm trading, but robo-taxis, all the rage on the conference call right now, and you can see that. We've been pretty aggressive in the room, actually after hours in the name, for obvious reasons. It looked like it was oversold. Long made sense if there was going to be any semblance of anything good on the quarter. I didn't think we'd get this out of it. Disclosure, I have calls and I'm long stock, but I really didn't expect this, candidly. But I'm obviously happy. But it was a dumpster fire of a quarter. I mean, let's call it what it is. I mean, a pig with lipstick's still a pig. You lost 4.5% on the rev. You got crushed on earnings, but we said the words robo-taxi, and we came out with some cool slides. And those slides seem to be just making everybody really happy. And there, you can look at the pitch deck, and the pitch deck in and of itself. Here, let me pull up some of the pitch deck, and that'll be helpful to show you how this is going. Give me a second here. I'm not going to edit this. I'm not going to have time for it in between the trading and everything. So again, I appreciate that. And I really appreciate you sharing this because it does help greatly. The pitch deck is on their website, so you can go watch the whole thing. But these are what everyone's passing around. He showed that Tesla has an app and that you're going to be able to ride hail Tesla. So I guess we're going to want people driving our cars when they're parked for some reason. I'm not going to really want that. I wasn't even aware that this semi started the construction of the Gigafactory for Tesla. Semi was out there. And so everyone's kind of going goofy over that and all crazy because they can take the car apart and put the car back together. Seems like something you should be able to do. But then, if you really get into the metrics, and it's kind of funny because people are like, how are you bashing this, but you're long? 4 numbers, 4 or 5 numbers, 4 letters. That's what I do. I trade. But if I look at this, I mean, look, free cash flow. Okay, free cash flow is red. The 0 line is red. Okay, so is that a good thing? No. Net income. Okay, this is net income. And then they adjust it for all the nonsense. Okay, this is awful. And if you look at how this is peaking, they're expecting units to be lower and lower. So you're going to have to come out with the new shiny object to keep everybody excited. And that's exactly what he does. So now at the time of the conference call, we're doing the song and the dance, and this is going to go. Is it the next revolution? No. But here's the thing about it. This just absolutely killed me, made me laugh. I think I'm funny. But how can I help you here? What kind of value can I offer here with this? 12, 22, 55. Watch those levels. Watch this level tomorrow like a hawk. Here, I'll put it in. I'm surprised. Let me clean all these off. They're after hour levels, but watch this level like a hawk tomorrow. Okay, that's a big, big level. I'm surprised you're through it that fast. I really am, but you are. And you're rocking and rolling after hours on a lot of these names. But this is really important for people to get, okay? And it's really important for you to get that as well. We're going to want to watch that level very, very closely. I personally think it's a dumpster fire of a quarter. Personally, I don't know how people are going to come out and funds are going to come out, meaning IBs, I should say, investment banks, and defend this. But you know what? Maybe they do. But it's a really, on any metric of any general metric, where you would look at net income and see it falling off a cliff for the first time in years. Anyone else would be down. He says robo-taxi. He's on the conference call explaining the robo-taxi. Stock's hitting highs. It is what it is, right? You can either argue it or you can trade what's actually happening. One will make you money. The other one will drive you a little bit nuts. Now, let's talk about what I actually think is driving us after hours. So if we take a look at Texas Instruments, we have what we would call a legacy company. We would all call this a legacy company, I would believe, right? And what's a legacy company? A legacy company is one that's been around for a long period of time. And usually when you have these calls, you miss on the revenues. And it's just not really just a lot of fun, these calls. And usually you're seeing like sequentially down, and this was sequentially down, but much better than expected on the earnings and on the rev. So what happened? Well, we trade up, but the guidance was excellent. Now, this is in strong comparison, very strong comparison, because we're all dying for that next piece of semi, right? Just give us that next semi information, okay? I'm trying not to laugh because it's just so funny, like how addicted we are to this information. But here's the point. We sold down because of ASML, right? ASML, we're never going to need lithography again. It's going to drop. We're going to fall, here we are. And then the bounce. And I technically, I'm just going to be blunt. I can't play this for anything more than a day trade until it resets. It's not my kind of trade. These kinds of trades they're not for me, right? I can pull money out of them in day trades, but candidly, if I lose institutional support, the way that I trade, I might as well just write a check to St. Jude's. It does not work for me over the long term. I need the setups. That said, this could be a game changer tomorrow for semis because Texas Instruments crushed. And you're even seeing it in the names. Like all of a sudden, people are looking at Texas Instruments and NVIDIA's up $10. So while this wasn't the greatest quarter in the world, what it represents is hope, right? That, hey, maybe we're missing something here. And so you can see the SOX is up as well. So what we want to do is we want to see how this is going to spread. Now, who's this really good information for? Lam Research. So Lam is next up to bat. All right, so now Lam here, let's move this over. So when you go here tomorrow and go Wednesday, and you'll see that. So I get a lot of comments about, wow, I can't believe that you put all this video out like this for free. I wouldn't think of it as free. I would think about it as I put all this together. I purposely don't run on ads. Please think of it this way. If you find value, comment below what you want to see. If you find value, it really means a lot to me that you share it. The amount of misinformation, I hate even saying that, but the amount of information by people that have absolutely no idea what they're doing is so rampant. And so what happens is people utilize that information to make decisions. If you find value in this, and whether or not you agree with my thesis on ideas, I think that we could all agree that there's a lot of objectivity in what you're saying here. That objectivity can help people make better decisions. And that's what I'm trying to do. I'm trying to get people to learn how to critically think for themselves and putting these pieces together. All day long, other people take the other side of my trades. I could care less. Right? That's not the game. The game is just to make money. The purpose is to give people the tools so that they can make the right decision. So I appreciate your help with that. That's it.